Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you're looking to retire early with forever passive income, you're in the right place. This podcast is the go-to destination for real estate investors, both active and passive, and multifamily apartment investors, both new, intermediate, and advanced. Now, sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So, hey, Samson, listen, so excited to have you on the show, man. Welcome to Accelerated Real Estate Investor.
Thanks, man. I'm pumped to be here. Thanks for having me.
Absolutely, man. So tell me a little bit about what you have going on. What's something that you're up to, something that you're excited about, something that, you're working on in your business that you're passionate for?
Well, I'm pumped that we're sitting in best and final on 288 units in Oklahoma City.
Nice.
And so, it's, how it goes. You never know if you're going to get it in the final stages like that, but pretty excited about the deal and just the opportunity of what we can do with it. So.
Nice. What took you over to Oklahoma City? What did you like about that market, about that sub-market, and specifically that property?
In general, I think the biggest challenge we're going to see in the next 10 years is just in and around affordability. I lived 16 years in Colorado and grew up in Los Angeles. And so I've seen the diaspora of people just making their way to Colorado. It used to be this pitch that Colorado was just, it had all the best seasons and it's just so affordable, and the cost of living, that is history. And so you're seeing people are now making the next move, which, they're moving into the Midwest. And so we think it has a lot of legs. So, beyond just the normal core metrics that we look for, which are just, a large enough population, a growing economy, so on and so forth, we're looking at affordability as kind of the driver, because you got to be able to deliver some yield to your investors, and these deals are getting tighter and tighter and tighter in these core markets. So
yeah, I love it. Yeah, we love the Midwest, the South, and the Southeast. We have a building in Lawton, Oklahoma, 216 Crosby we call it, and it's performed well for the last 2 years. We had about $1 million capex plan. We're right at the tail end of getting that thing refied, and love the Midwest and the affordability side of things. So good luck.
Lawton's pretty tertiary too. It's a good ways out there.
It is. Yeah, absolutely. Yeah, good luck with the 288, man. I hope you land that. It's exciting stuff. So tell us a little bit more about your model. Tell us a little bit more. I mean, you invested in the stock markets, you've done commodities, you pivoted over to real estate. You actively syndicate your deals and bring in passive investors, show high income and high net worth individuals how to get great returns with real estate. But tell me a little bit more about your structure. So if you were to get this 288 unit, what is that going to look like? What do you see as far as current rents versus future rents, current value versus future value? Give us a taste of what that deal could look like and just your structure and model overall.
Yeah. So our structure specifically, we were really focused on the syndicated model. Brokers care about one thing, right? They just want to know that you can close. So I spent 9 years in strategy, scaling up a large marketing and technology company, built 4 departments and scaled that thing up to over to 100 million. And the one thing that I learned early was the power of a partnership and carrying a deep bench. And so we've shifted a little bit. I've really focused on, there's so much damn money out there. I mean, it's stupid. If you have a great team and you have a good deal, you can go get the money. That's it. So we've actually shifted a little bit more towards just looking for good co-investment partners as well, and leveraging more equity brokers and things like that to source our equity piece of our deal, and also just partnering up with some other high net worth individuals who maybe have some 1031s and things like that they need a place. So that's what's changed. Sometimes dealing with smaller investors or singular investors, it's like herding cats.
Yeah, sure.
Something that we're trying to get better at. And we actually have some people in place now that are really focused on building up our private investor network. But man, that gut feeling of like, is the money going to show up? I hate that feeling. So with going the co-investment route and going, leveraging equity brokers and things like that, you kind of alleviate that. And then you can focus on finding a good deal. So this deal in particular in Oklahoma City, the group was an acquisitions company and they'd been acquiring a ton of properties, and then they pivoted kind of in the middle of their career towards development. And that is where their focus has been. So it's the perfect type of deal where it's just being mismanaged. I mean,
Got it.
they have their own property management team. That team is not being actually run well. They're not being allowed to drive rents. They're not being allowed to push the property in the way that it should probably be pushed. And that's probably because they just don't want to rock the boat. They got income coming in. They're focused on development, and everything's good.
Right.
So the rents as a whole on the property were just $75 below market, as is do nothing day one. And then, they had started a light value add plan, and they were showing, another $75 above market on improvements in rents. So the goal was to come in and just start managing the property well, reduce some of the OpEx by putting in a third-party manager, getting the rate down, getting some more efficiency out of the units and the properties, turning units, and we're going to renovate about 112 units or so within the plan.
Nice.
But it's a C-grade property in a C-grade community. So also just keeping in mind that, we're not trying to outpace the market, but it's the nicest property. Yeah, it's the nicest property in our opinion in that market, and it should be crushing it in comparison to the property that's right next door that's already achieving the rents that we're shooting for. So
yeah, so a couple things, Samson, that stand out. First of all, you mentioned the word equity broker. So just explain that to our audience. And this is kind of a new thing. Like I give President Barack Obama a lot of credit for the Jobs Act of 2010, 2011. This whole idea of this 506C, Reg A plus, all these kind of things. It really has allowed all kinds of business, including real estate, to really take off. To the point now where you've got firms and family offices and equity companies literally just looking to place equity from investors in deals. And it falls into that kind of mezzanine category or very different names for it. But many people might not be aware that there are literally companies that will stroke $1 million checks for a big part of the capital stack that are not in first position. So help the audience understand, what is an equity broker? What's the value of them? What do they do? What do they charge?
Yeah. So I think most people are familiar with a debt broker, right? With
Sure.
a mortgage broker, right? So same concept, but people that are looking to place debt, those people are interested in the security that comes along with the note, right? And that just consistent and persistent monthly check, yearly check that they're going to get. With equity, people want to participate in the upside. So an equity broker is effectively the same thing. They have these relationships with family offices and trusts and pension funds and people who are looking to place capital. And a lot of them have, let's call it $5 million minimums. Like that's how big the check needs to be in order for them to write it. But sometimes, these smaller family offices, they're looking to place $1 million, $2 million bucks. The key there to getting access to that equity is, again, how deep is your bench? Like, what is your experience on your team, and who are you guys? If it's your very first run at it and you don't really have any experience, well, then you're going to need to borrow some experience from some other seasoned people in order to be able to do that. But man, it's a lot easier to pick up the phone and make one phone call than it is to go call 100 people and try to raise the capital. But I think both of those things can run in parallel. You can do those, and on certain deals that are smaller, maybe call more friends and family, be doing that. Yeah. But it can be challenging. You get up in there $40-50 million, and you got to go raise 15-20 million bucks. It can be a little more challenging with just private money investors.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. Yep, I agree. We have a 552 unit that we just took down in Spring Branch outside of Houston. And a similar situation where we had an equity company that was going to come in and do an $8 million, basically mezzanine equity type of investment. Then they looked at our first mortgage and they decided to actually fund the whole thing. They blended it together, right? So instead of first mortgage at, let's say, 3.5%, and mezz equity at, let's say, 8% plus an 8% kicker down the road, they blended that together at like 5.25. and that worked out. And then we still had to raise $8 million from essentially mom and pops, right? Which we did that too. We bought that deal. So, but that's what an equity broker does. And I'm actually surprised. These guys operate all over the place in the Sun Belt, down south. And when I started hearing about this in the Midwest, I'm like, what do you mean? Where did these guys come up? Like, who started doing this? This is fantastic. So relatively new. And again, I want to give the Jobs Act a lot of credit for kind of opening up these opportunities for people. So from your perspective, Samson, how long do you think these equity broker type of things have existed? This is kind of relatively new still. What are your just thoughts on that? And as the market changes and evolves, how do you see that helping you with your deals in the future?
Yeah, how long it's been around, I don't really know.
Seems recent, pretty recent, doesn't it?
I think it's just more commonplace because it's just like syndication in general. Like there's just more marketing and awareness about it. But I mean, back in 1987, after the savings and loan crisis, Donald Trump actually was a big proponent for advocating for bringing the syndicated model back to the market so that we could start to move more capital in and out in order to do development and, acquisition and so on and so forth. So it's been around for a while. I just think that it's more easily accessible, or the information is more easily accessible.
Mm-hmm.
You either have a lot of knowledge and a lot of deals and not enough money, or too much money and not enough deals.
Yeah.
And so it's, you got to always keep in mind that you hold a lot of power as the deal finder and the deal maker if you can put together deals and structure them, and et cetera, because that capital needs somewhere to go. It's, inflation came in at 4% in the first quarter. So if we just stay on pace, it's going to be 16% this year. So sitting in cash is just literally burning in your pocket every single day. So people need to deploy. And if they're trying to offset their inflation hedge, they want a deal. They want to be able to place capital. So it's not that hard.
Yeah, love it. Now, the other thing you mentioned, which I think our audience would be interested in hearing some more commentary on, is you mentioned that this deal is 288, that the current property manager, the current boots on the ground, they're not being allowed to push rents. I thought that was interesting. So just explain that. Like, why wouldn't they be allowed? You mentioned that they don't want to rock the boat, but it seems just so like anti-smart, like anti-business to not push rent. So just why would somebody do that? Like, again, I'm baffled by some of the decisions other operators make. So what are your thoughts on that?
My thought is that they're just distracted is kind of the biggest key. And they don't have, their best move would have been to actually hire a regional property manager, save the 3 to 4%, and that's what they think they're saving, and pass that off to a regional and just say, hey, hammer this property and run it like it really should be ran. But there's this misconception that if I own the whole thing, if we're vertically integrated, that somehow we're going to make more money. You're never going to know if you're not there and you're not living there. Maybe that's one of your properties and you're not in that market every single day. Man, it's really hard for you to know how the market's moving, what's changing, how rents are being pushed on another property, what's sold over here and there. If you're just not focused on it, it's just not that important to you, or maybe you don't think it's possible. It also depends on what your entry price was.
Sure.
If you bought it at 10 million and you're talking about, selling it at 15 or 17 million, you're doing okay. You got a pretty good spread there. The other part of that is, they maybe want to leave some meat on the bone for the next person.
Sure.
That makes the deal more attractive to people like you and I to say, well, I can come add some value here,
Yeah, exactly. It just seems so bizarre that our audience would be like, why aren't they not pushing rent? That type of thing. That's great stuff. So Samson, let me just go back to this equity broker arrangement. So if we were interested in finding more equity brokers for our deals, like where have you found yours? What does it take to find someone like that? Are they just on Google, or is this somebody that you found through relationships, meetups? Tell us about how do we find more equity brokers?
Yeah, I mean, Google's obviously a good source. One of my partners is a commercial loan originator, right?
Okay.
So he has a lot of those relationships already. Just being in the world of debt and bridge lending, he knows those people. And then there's also some big names that'll come up, Cooper Horowitz, Toro. Those are some big names that are pretty well known in that space. There's some people that even do it on a more like private consulting type capacity as well. I've come across guys that spend a lot of years in the business who have a ton of relationships, and they say, hey, I make introductions. And I think one of the questions you asked before that I didn't answer was the fee structure. How does it work?
Yeah, sure.
It's very similar to like originating a loan. If you originate the equity, you're 1% of that. So sometimes it's 1%, sometimes it's 3%, depending on the person or the group. And then sometimes there's like a holdover period where they're saying, hey, if you use this equity for the next 3 years, I get a slice of that every single time it comes through. There's a number of different ways that it can be structured. I think, you've been in the industry long enough and been investing long enough to know that, you can't take the first quote that you get or the first bank that you call as like face value, because they'll say something like, you can't do that. It's like, that just means that we don't do it that way, but it's out there. If you look hard enough, you can go find it.
Heck yeah. Absolutely. Yeah. It's interesting when you see like a really well-written, like LinkedIn post or Facebook post about a deal closing, there's almost always in the comments somebody who's an equity broker or a debt broker that's like, hey, next time you do a deal, here's my information, right? Those guys are real. They're out there. It's networking. It's obviously prefer to have a favorable introduction face-to-face or virtually than just comments in a Facebook or an Instagram or a LinkedIn post. But I'm surprised when I make a really well thought out post and we get hundreds of comments and lots of views. Like there's real guys in there doing real deals, real equity and debt guys that can help you on a deal. So if you don't have a deal and you're looking for these relationships, follow other people's posts, right? There's another decent way to find it.
And it's a highly lucrative career to be an equity broker.
Oh yeah.
Like to have those relationships, and have that book, it is very, very valuable. So there's a lot more than you think, the people that leverage those relationships to make a mint.
Yes, a mint. I like it. Nice. So Samson, tell us a little bit more about your start. Like how did you get really going in the multifamily space and the real estate space? And what were some kind of early challenges that you faced?
Yeah, my path into real estate literally makes no sense. I went to school, studied physiology. Thought I was going to be a orthopedic surgeon. My grades pretty much determined for me that wasn't the case. I played D1 football and trying to manage all that. I wasn't like some of my teammates who went and got a degree in like Native American studies. I got like a real degree, and it was just a lot trying to keep it all together. So I was an average student at best, and trying to enjoyed my college career too.
Sure,
so,
as you should.
But I met my wife, and I knew, man, I met her when I was like 20. We dated all through college, and I just knew I just wanted to marry this woman. And so you start looking at what your career path is, coming out with a degree in physiology. I was not about to go like work in a lab or do something like that.
Right.
This does not meet my personality. I was thinking about the route of strength and conditioning. I actually own a gym now, so I did it.
Nice.
But the road of strength and conditioning, man, it's long, and you're just a little bitch basically for like 10 years until you get like a real career. You can make a great money. The head coach at like Arkansas makes like $600,000 to be the head coach, but he's been there for like 20 years. Like the dude's going to be there until he dies. Right. So I kind of I didn't have anybody in my family that was a business person, an entrepreneur. I didn't have anybody that was in finance or investing. My uncle kind of dabbled in real estate a little bit. So when I was getting ready to graduate, it was actually my father-in-law. I, sat down and talked to him. I was like, man, I don't know what I'm going to do. Like, I'm 23. Like, what the hell am I going to do? He's like,
he probably loved hearing that from his son-in-law, future son-in-law.
Well,
you're going to take care of my daughter. You have no idea what you're about to do.
he didn't even go to college. So he's been an entrepreneur his whole life. So he's like, hey, I can't teach you to be humble, hungry, smart, gritty, competitive. Like, you just have those things. I can teach you how to be a broker. Okay. So I graduated on a Friday with a degree in human physiology. I walk into the commodities brokerage on the Monday. And about 3 months later, September 29th, 2008, newly crowned broker, the Dow Jones fell 777 points in a single day. Boom, baptism by fire. Welcome to economics.
Yeah.
But man, it was invaluable in my career because I had nothing to lose, right? So I watched some customers make a killing, and I watched some customers get killed.
Yes.
First time you watch somebody run their account from 25,000 to $1 million and back down to 25,000, you're like, holy cow, leverage is good until it's not good. The people that consistently made money were my actual producers, people that had stuff, gold, crude oil, pigs, cows, corn, soybeans.
Yeah.
They always used the market to hedge. They didn't just speculate. So that was kind of the notion of like, assets and things are important, right? And I learned that quickly, like economic crash, and you start watching what's happening in the commodities. I remember when crude oil was trading at $110 a barrel. Yeah, and you'd come in and the market would swing $10 in a day, be up $5 and down, $5 by the end of the day. So a lot of volatility. So I started kind of shifting my focus on, safe and consistent, evergreen, I had a great mentor when I was getting started in trading. He was a technical trader, And he's like, you're going to lose more in this game than you will ever win. And the whole, when you're using highly leveraged commodities, it's all about keeping your losses small, because your winners are going to 10x. But if your losses are 10x, you're net zero and you're going backwards, you know? So I applied that concept, and that's what made a lot of sense to me about real estate, is I could actually see what 99% of my risk factors were. Not COVID per se, but I can plan for it, right? I can build in a break-even occupancy. I can build in a contingency. I can make sure the property cash flows from day one, right? I can make sure that, you know, I can withstand 20, 30% vacancy in the property. You just can't do that when you're speculating in commodities and markets that are manipulated by artificial intelligence and stuff like that.
Right.
So that was kind of the appeal towards it. And then, you know, my wife and I got married. I was 100% commission. It was, you know, tough to try to buy a house, and it coming out of the economic crisis, but we bought our first house, and I think we held on to it for like 3 years or something like that, made some renovations, sold it, and then made like a really pretty penny. And then the market was just accelerating. So we started pulling equity out of our house. I hate lazy equity. It's nice to say like, oh, on paper, I got $250,000 in equity, but I'm like, that 250 could go to something else. So we started parlaying that into rental properties. And then after doing that for quite a few years, it's like, man, it's onesie twosies. It's a lot of work. And I could, you know, buy 1 or 2 houses a year for the next 10 years.
Right.
Or I could just spend the next 2 to 3 years focused on raising money, building the team, getting to know the right people, sourcing deals, meeting equity brokers, doing those types of things, and do one deal and effectively 10x my return.
Yeah.
So that was what the precipice was. And I just, you know, leveraged skills that I had. You know, 9 years I was inside of a marketing and technology firm and hired a ton of people and scaled a couple departments, and we built a really incredible company. And so strategically over the last few years, I've been building those groups of people on my team. And, you know, now I've got some great joint venture partners that I work with. And in totality amongst our group, you know, we have like $1 billion under management. It's 400 million owned, 750 million of that is multifamily assets that are managed with some of my co-investment joint venture partners. And that's been my focus. And, you know, we're doing deals, you know what I mean? So
yeah, love it.
I love real estate. It ain't going anywhere. Maslow's hierarchy of needs, food, shelter, and water. I mean, you know, Americans are funny. Like, they talk about all this, life is so hard. It's like, you guys have no idea. Go talk to, you know, our grandparents, our great grandparents. They're like, you didn't live through a depression. We were trying to figure out how we were going to eat. Like, you guys are fighting about stupid stuff. You know, and so some of the needs and wants and stuff that we talk about right now are kind of silly, in my opinion. But when you get down to the brass tacks, the most fundamental needs, when everything hits the fan, people will do everything in their power to make sure they got a roof over their head. And I can get down with that.
No doubt. Especially like even looking at the Great Recession, right?
Yep.
Multifamily was only down like 10, 11%. You know, residential was down 33%. The stock market dipped 50%. Commodities got crushed. Gold and silver went through the roof, obviously. But multifamily, 10, 11%, and then it quickly swung right back because
that's a key.
B class, people got a place to live. They can, you know, maybe they don't pay their rent. Even COVID, right? There's people with eviction moratoriums and this stuff. But if you were an active operator, we did well. We had like 98, 99% collection rate. And we had to be a little bit more creative. We had to go to the government slush fund for some customers, some residents, fill out the applications, be proactive with those people. But then, again, the government set up the eviction moratorium, but then they set aside the slush fund. I think it was like $25 billion for rental assistance. And that's worked, right? We didn't have tons of people get this rental assistance, but we got checks for $3,000 here and $5,000 there and $2,000 here and $4,000 there. You just got to use the system. And generally, though, people that are just good B-class residents are going to pay the rent, period, the end. You dabble in C minus, D, you're in deep trouble. And those are the people that take advantage of the system, right? But man, it's held up really well. So I love your position on that. You know, food, shelter, water, that's what people need. In my newest real estate investing book, The Flip System, you'll learn the proven secrets and strategies that I've used to be a successful real estate investor. You'll also hear the story of my journey from quitting my job to doing over 2,000 units of apartments. The Flip System is now available for a limited time. And you can grab your free copy at getflipsystem.com/podcast. You'll learn the same proven principles and secrets and investing strategies that I used to quit my job and pursue a life of financial freedom. In this book, I'm sharing exactly how I was able to personally close over 750 profitable real estate deals, make over 400 private lender loans, raise over $30 million, and acquire over 2,000 units of cash flowing apartments. Get my newest book now for free at getflipsystem.com/podcast. That's getflipsystem.com/podcast.
Historically speaking, other than 2008, real estate in general has held up pretty well. It's had more up years and less down years than the stocks or bond market combined. So, you know what I mean? It's like they take that one moment in time and they try to like cascade it over like everything. To your point, default rate on commercial multifamily during 2008 was 0.04%.
Right.
It's just like it's a cash flowing monster, you know, and you can just withstand so much more vacancy and turmoil. And, you know, if you have 300, 500, would you say 526 units on that one property?
Yeah.
You could turn down the rent $5, $10 across the entire property and serve a lot of people and help them. And it doesn't impact you like insanely too much. Right. You know what I mean?
Absolutely.
Whether it's economic or physical vacancy, that's the power of leverage and the power of scale that you get with multifamily that you just can't get with anything else.
Yeah, I love it. So Samson, now that you've gone through that ramp up period and learning the business and doing different things, being through these up and down markets, you have a huge portfolio now, a lot of success, your partners, you guys, really, really, really substantial stuff. Looking back at your journey, what would you do different? Like what advice would you give your younger former self, or what advice would you give our audience, things you've learned along your way as an entrepreneur, as an investor? What's been the things that have stuck out that have worked well, and maybe some things that you would do different?
Man, seeking mentorship much earlier than I did. You know, I've always been a really independent, kind of walk to my own drum kind of guy.
Yeah.
And a lot of times I just got to go like get into it first and really bang my head against the wall and figure it out. But man, every time I've leaned on a mentor or hired a mentor or anything like that, it's been insanely powerful to accelerating my growth, because success leaves clues, right? And if I can get from point A to point B without all that headache and turmoil in between, because you're going to give me a roadmap, why not do that? You know what I mean? And then just partnering up sooner with people, you know, just trying to do, especially in this business, trying to do everything by yourself and without any kind of track record is really challenging, man. Yeah. It's incredibly, incredibly challenging to go to a table against guys like us, and you're the new guy on the block. Nobody's ever done a deal with you. Nobody knows who you are. Nobody knows your track record or your assets under management or anything like that. And to say, no, I'm good for it. I can get the money. I can close on the deal. You know, it's like, that's very hard to do. Not to say that it can't be done, but you know, there's like 5 ways you get into real estate investing, right? Number 1, you're just like born into it. Your family does it. Number 2, you spend 7 to 10 years working in the industry. A lot of like commercial mortgage guys build those relationships, and then all of a sudden they go on and they're putting deals together. You go and bang your head against the wall.
Yeah.
Right? You find a mentor, right, and learn from it. Or number 5, you just invest passive. So I think it's also important too that people just draw a clear line in the sand of like, do I want the benefits of investing in real estate without the brain damage? Okay, cool. I like to invest in real estate. Or am I ready to go be an active owner, an active operator, somebody who likes the business of real estate? You know, that'll kind of determine what your path should be.
Yeah.
If you just want to invest, you know, call up Josh, call up me, and just give us some money and replace it for you.
Right.
But if it's the opposite, man, then it's a long road. You know, be prepared. And mine was a combination of all those things: working in the industry, banging my head against the wall, and finding mentorship. I had no family members or anybody to guide me, you know?
Right. Love it. That's great advice. I like the 5 ways to get into real estate. I think that was number 3, bang your head against the wall. It's my least favorite of the 5. So Samson, let's finish with what we call the final 5. You ready for this? All right, here we go. What's your favorite way to find great multifamily deals?
Man, the power of network and relationships, man. We have built and fostered an incredible list of brokers, and people don't realize that, but the brokers really do control the market. And so if you can show them that you can close, you can get deals in front of you before they ever go fully marketed, and you can have an opportunity to have a conversation that other people aren't having.
Yeah.
So that's my number one favorite way to do it, is just relationships.
And I have to add this. Normally this part of the interview goes really fast, but I have to talk this one thing. Yesterday I had lunch with a guy, 90 years old, owns 600 units. And he was on the former board of, with the Ratners, Forest City Enterprises, which was one of the original publicly traded REITs, right? Wow. Multi-billion-dollar company. So I had lunch with him yesterday. I had a friend of mine that got the meeting, went to the country club, had lunch with the guy. Immediately after that, I went and met with a broker to go walk a 486 unit that we're going to offer on next week. I'm talking to the guy, the broker. He's like, yeah, I've met with that guy 24 times already, right? I've known the guy for 15 years, 20 years. I know he's got 7 daughters. I know exactly what he owns, the building that he owns. So that's the difference, right? What Samson just said about networking with brokers, like the brokers already controlled that relationship and talked to this guy for years over, he said 24 times, lunch and meetings and things like that, versus going direct to seller. I'm starting from zero. Now I've done both, but relationships with brokers and the network is enormous. My favorite way to find deals too. Samson, question number 2, what's your favorite way to find capital or to fill out your capital stack?
Currently, it's leveraging equity brokers.
There you go.
It's a lot easier than herding cats. I think long term, you probably make more money as a deal maker if you have your own investment network. But man, it's really nice to just make one phone call and just be an expert at finding deals, putting the deals together, and operating the heck out of them, than it is to also have to build this, investor relations arm of your business.
Yeah, I agree. Samson, what's your favorite book that you've ever read or advice that you've ever been given?
Ooh, man, that's tough. Favorite book that I ever read is probably the book Extreme Ownership by Jocko Willink.
Jocko, yeah.
It's an incredible take on just success. The difference between people who make it and people who don't are people who are just willing to have extreme personal accountability.
Love it. Samson, I know you're busy, entrepreneur, family, lots of assets, a lot of success, but you've got to find a way to think, a place to think, decompress, and just kind of step back from it all and kind of be outside your business and slightly above it, looking down on it to think. What's your favorite place, your favorite way to decompress and think?
Well, I live in Colorado, and we have these unbelievable views of the mountains.
Oh, I'm so jealous.
Where my house sits is it's on a ridge, and I can see clear to Wyoming, and I can see clear to the Rocky Mountains. Look right over the Horsetooth, which is in Fort Collins. And we have, in our neighborhood, we have the highest point because the people that built this house put a balcony in up there. And so we just sit out there and just watch the Colorado sunsets and just think and enjoy. Man, it's just, right now it's so beautiful in Colorado. You can't even.
I bet. Jealous. Isn't it funny how, like, when you actually spend time thinking and spend time just decompressing, like, usually that's when you get your best ideas?
Oh, right? My gosh. I mean, it takes about 3 days to really unload from the work mode. And yeah, the ideas pop in out of nowhere. You just wouldn't expect them.
Yeah, absolutely. Samson, last question is, you mentioned mentorship earlier. You talked about it a lot, how important it's been for you. Has there been a leader or a mentor that's had a big impact on your life? Who is that and why?
I'd have to give a ton of credit to my father-in-law. He showed me a route in my life that I didn't know was attainable, which is this world of just finance and investing and entrepreneurship. And so he was the first person to just basically say, hey, you have these intangible qualities that I can't teach you, and here's how those translate over into success. And then, playing football and just having some incredible coaches all around me. Yeah. That's been a big part of it. Also just, my mentor when getting into multifamily, the guys over at 37 Parallel, if you don't know who those guys are, Chad Doty and Dan Chamberlain, just really smart, savvy operators and just good dudes who put together a great program,
Nice. I love it. So Samson, I'm sure our audience will want to connect with you. Great interview, by the way. Love your energy. If our audience wants to reach out to you, connect with you, do a deal with you, invest with you, or just learn more about you, where can they go?
So our website is thegrowthvue.com. So that's where you can just learn more about our group as a whole as multifamily operators. And if you want to learn more about passive investing in real estate, I think that's one of the things that prevents people from actually taking action on it. Is it can seem scary because it's a totally different world, right? You decide you want to be a real estate investor, you go, man, that's too much work. So you're at this crossroads of like, do I just place LP capital or do I just keep doing traditional stocks and bonds? So I think what helps people is getting a grasp on the actual industry itself and what it means to be an LP and how to actually screen a deal. What is it? Screen a sponsor. What does that look like?
Right.
So I actually put together a master course or master class. You can go to passiveinvesting.pro and we'll just share a little bit more just about how multifamily works in general, as well as how you can develop a natural framework to analyze every single deal, whether you invest with Josh or I, or you go invest on your own.
Love it. Love the resource, passiveinvesting.pro and thegrowthview.com. Samson Lanston, had a blast on this interview. Man. Thanks so much for coming on Accelerated Real Estate Investor.
Thanks for having me.
Hey, Josh here, and do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes, okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter. What we're gonna do then is every week we're gonna pick our favorite rating and review, and we're gonna send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You were just listening to the Accelerated Investor Podcast with Josh Cantwell. If you enjoyed this episode and learned something new, help us build the AI community by leaving a review and 5-star rating on our iTunes podcast channel. Also, don't forget to subscribe so you never miss another episode. To see passive investing opportunities, visit freelandventures.com/passive. To start your journey toward the lifestyle you've always dreamed of with multifamily apartments, apply for one-on-one coaching with Josh at www.joshcantwellcoaching.com.